On Hot Picks today, we are touching on a couple of stocks involved in smart glasses. We're joined by Anthony Chukumba, Managing Director at Loop Capital Markets. Anthony, thanks very much for giving us the time.
Thanks for having me.
Start off with your first idea, if you would, National Vision Holdings. So they've been selling smart glasses, the Meta, Ray-Ban, Wayfarers. So they're a retailer, a retail chain?
They are a retailer. So they are one of the largest optical retailers in the U.S. Their main two concepts, one's called America's Best Contacts and Eyeglasses. The other one is called Eyeglass World. They've got, call it 1,100 stores, and they're nationwide, quite frankly. And they're a value retailer, so they tend to undercut a lot of their competitors on price. Now, to be very clear, smart glasses is just one part of the thesis. It's actually a relatively small part of the thesis, but you are correct. They are selling the Ray-Ban Meta smart glasses. They have them in about 300 stores. They're going to roll that out chain-wide by the end of the second quarter. But there's a lot of reasons that we like this stock aside from smart glasses.
Right. So they just in regular eyewear, then they tend to be the price is one of their propositions here.
That's correct. So they are the low price leader by a very, very wide margin. So they will undercut certainly like a Pearl Vision Center or a Lens Crafters, but even like a Costco or a Walmart. I mean, no one really sells eyeglasses any less expensively than National Vision does. But, look, there's a lot of reasons that we like this stock. First off, look, glasses are a medical necessity, right? They're non-discretionary. So we expect glasses sales to hold up much better in a sort of middling macroeconomic environment. They also have new management, and the new management team has just a raft of initiatives. I won't bore you with all of them, but one of the main ones is that 42% of their sales are covered by vision insurance. Historically, they weren't basically maximizing vision insurance benefits. So in other words, I'm a vision insurance customer. I have a benefit of $140. I can spend up to $140 on frames without paying $1 out of pocket. They were selling those folks the same way that they were selling folks who just walked in without vision insurance. And their ethos was to try to get the customer out at the lowest possible price. So they would sell that person $100 worth of glasses when their benefit was $140. They're not doing that anymore. And that's just one of a number of other initiatives. They have a new advertising campaign. They're adding higher priced frames to their stores. They're doing a better job of converting in the store. So just better selling tools for their consumers. They're taking costs out. I mean, you name it, they're doing it. And the valuation, even though the stock was up about 170 or so percent last year, and it's off to a pretty decent start this year, is still attractive relative to historical levels.
Let's move on to Warby Parker, because the stock has been moving higher, and smart glasses here seen as a catalyst.
Smart glasses are definitely a catalyst as well, but once again, a relatively small catalyst. So with Warby Parker, basically, they have a partnership with Google and also with Samsung, in which they're going to develop Warby Parker smart glasses using Google's Android XR operating system. But those glasses are not going to come out until, call it like late 2026. So I don't think they're going to have much of an impact in 2026. I think certainly they'll have more of an impact in 2027 and 2028. To be very clear, we are very, very bullish on smart glasses. But with Warby Parker, our investment thesis is just around the fact that this is a company that has about, 320 or so stores. They think they can grow that to 900 stores in the U.S. There are 45,000 optical stores in the U.S. More than half of them are independents. And similar to National Vision, Warby Parker is a value retailer. So their entry-level price point offer is a pair of frames, single vision, a pair of frames with single vision lenses, and their opening price point is $95. Once again, nobody comes close to that. In addition to that, their stores are beautiful. I mean, particularly for optical stores. Most optical stores are kind of sterile at best, but Warby Parker stores, I mean, they're kind of like the Apple stores of optical retail. So it is a much more pleasant shopping environment. And they're underpenetrated in a lot of high margin areas. So, for example, they sell a much lower percentage of progressives relative to a lot of other optical retailers. They have a much lower percentage of eye exams relative to a lot of other optical retailers. So this is an organic organic square footage growth story, but there's also opportunities for them to further drive store productivity.
We've less than 60 seconds. Sorry, Anthony. Ollie's Bargain Outlet Holdings. What draws you to that stock?
Yeah, so they are a closeout retailer, the largest closeout retailer in the U.S. Once again, given the kind of uncertain macro economic folks trading down to Ollie's, and they are given all the rash of retail bankruptcies over the last few years. So think Bed Bath & Beyond, Christmas tree shops, Party City. They are seeing more and more attractive closeout buying opportunities. They're also buying more direct from manufacturers, particularly in the CPG space. So that's a name we really like as well.
Anthony, thank you very much indeed. Anthony Chukumba, Managing Director at Loop Capital Markets.